Hello everyone, this is Sam Wong again. Today is November 2nd, Sunday. Just trying to give you the stock market updates and what happened. Look back of October and what is the projection future recommendations, what should be doing in your portfolio and what to watch out for. The stock market outlook for October 2025 was largely positive with major US index like the S&P 500. As you can see that actually hitting the record high and year to date, the Dow is up 12%, S&P 500 more than 16%, and the Nasdaq is nearly 22%. The positive performance was primarily driven by strong corporate earnings, particularly mega cap technology communication service sectors, which I will get into it next. Like you said, for those of you who hear my video last time, you know that I was saying that S&P 500 projection was 6,900. So you actually hit 6,900 and pull back a little bit. And now the next projection will be 7,200. So it's maybe about 3% higher than where it stands. So that just gives you some idea that, from that perspective, the individual stock may be probably up about 10% to 15%, depending on which stock you're talking about. Okay, so there's still some upswing, upside potential, but the market actually, analyst was basically saying you have to be cautious. But again, in November, historically, it was actually the best month, which was actually given about 1.8% return on average gain since 1950. So some analysts remain saying the market will be bullish due to the seasonal trend. So I would like to show you this. Just want to talk about, for those of you in particular very interested in 7 mega taps, megas stock, which we're really talking about it very shortly. And also what was currently doing is the Fed September rate cut and subsequent communication suggested potential for further easing, which is good for the market. And the AI could be the great driver investment, and we'll get to the mega, how much money Singapore is going to invest. And while consumer spending and GDP growth remains resilient, they actually signed a labor market softening, including slow job growth, which actually in the Fed minutes, Powell did mention about talking about the AI, which is very different than the 1990, 1980s dot-com bubbles, and also how it was actually materialized in some of the companies which have strategy and showing to prove that it's really giving returns. And also the job market really is just have to be more cautious about it. Kind of, doesn't really have a growth of jobs. So the job growth average ADP reported were showing 32,000 job losses in September, and Amazon and UPS have announced major layoff. Just that you know, and then P ratio overall is about 22x for average of some of the industries. So it's that's why it will be interesting to look at how November prediction going to look like and whether it's going to up or not. So as you can see here, just really Google from end year to year comparison, earning per share is 35% up. Amazon 33% up. I bought Amazon about $200. I've been waiting forever and not going up. And I mean, and then now just like with the earning was doing really good and up 10% in one day. So now it's at $242. So it be expectation of robust AWS growth up 20%, strong advertising sales, and 9.5 billion investment gain in the Anthropic. The other one, Microsoft is also really good, exceed forecast for strong growth in cloud business, up 40% driven by AI demand. Okay. NVIDIA was also doing really, really strong in the second quarter. It's also some massive growth driven by data center AI chips. Q3 results were pending as the end of October, which actually doing pretty good as well. The stock had hitting $200. Tesla actually wasn't doing that great. If you look at end-to-end year-to-year comparison, down 37% on earning per share. And revenue, however, year-to-year changes still growing 12%. But as you know that they were competing with Chinese EV really lose quite a bit of market share in Europe. So, but again, this stock recommended for long growth So let's look at each individual stock really quickly. Just to wrap up Apple. For those of you who hear my last video, you know that Apple was about $240 at the time I asked is goodbye, and obviously now you hit 52-week highs because you break the level of, at that time it was announced at 252 at the 52-week highs. Now it's at $270. I think Apple sales was okay, although I'm not thinking how sophisticated. I mean, really, the phone really is. The iWatch is $800 for those of you who in my last video. You did have people kind of buying into it and love the watch, but I don't really know there's a really need to buy an $800 watch that expensive. But regardless, to start to giving more guidance away from COVID, and the time wasn't giving guidance. Now I'm going to talk about future, and I'm projecting the stock go to $300, and honestly, you still have pretty good potential. Apple is really big stock, and ultimately, and you will through innovations, and you're going to be doing better and better. And a lot of, like cloud business and locked into, what you're doing in sales with games and stuff. They're actually pretty good in that space. Microsoft. I actually buy around October 15 time. So about 500, kind of low end, close to $510. And I actually sell a 550, which is actually high end, which is in 2 weeks I make $40 in this short, not too bad, 8% return. And really I sold it. I'm planning to buy back at $500 level, and you may be able to adjust based on your preference. But this stock ultimately in the long run, I see $600 or more. Actually they were doing pretty well. They beat earnings, but yet the stock properly, people pull back for really profit taking. And then the other one also need to pay attention to. Skip these for real quick. Meta actually has doing real well. It exceed expectations as well, but however, the stock got hammered and dropped off the announcement. See the stock going back down. I recommend the buying price 600 is below for Meta, and given the 750 was a high end, then you take $150 discount, which is pretty good. And ultimately, if you recall that, and pretty much in last year at some point, Meta was really suffering. The stock was actually down to like below $300 mark. At that point, analysts were saying that the stock was pretty bad. We don't know if they make money. They invest in AI with as a return and whatnot. So that's why they actually downgraded the Meta, the stock a lot. But then through the scale of the timing of the and year or so, it proved that the AI return materialized and come back and make more money. So this time was the same thing. Now they doing the guidance, they say they're going to spend a lot of AI again on growth, focus on future growth, and yet the revenue projection will be lower than the money being spent. So very same story, a footprint again, like a year or so ago. So I was saying this, right, with next year normally the market may not be so good, and then wait till election time coming again, around that year earlier. So the stock there will be overall momentum again in the market, and especially we don't know the job market being poor and a lot of layoffs, what happened to to US economy, right? So I would say this, right, if the market this matter was getting a pullback again, let's do the math. 10% is $60, so probably 580 bucks, right? 580 bucks, and then if I say 20%, you'll be really $500 will be really a good buy, like a discount, serious discount to you. But I look forward, probably below 600 is good to buy. And then I would say probably when you may have to keep it for a year and a half, and it will be $900 amount of potentially. So then you do the math. If you buy 600, you get 900 in 2 years, which is really not a bad return, right? 15% return in a year, okay? 30% you return in 2 years. So this will be a good story to if you're interested, you can buy it for a longer term instead of other stock. I recommend the short term. Once it gives you 20% or more, you walk out of the market. La Video is another one very interesting. I bought it around $95, $90 below $100 just in the April when early of this year, Trump announcing the tariffs, right? It was really the market, if you recall, it was depressing. There's a lot of negative news and bad things talking about how optimistic at the time about the market, saying, well, there may be correction coming now. It's time to correct in the market. Yet you see the stock really actually heating from that to the end. If you have bought it in April, this low point, you're 100% return on video, which is a lot better than the market, right? So this start talking about they're very monolithic in terms of the technology that they have and where they already backlocking for selling the stock, and also they're waiting the chips, and also they're waiting for China on the discussion and negotiate depending whether Nvidia can sell chips to China, which actually the forecast guidance had taken that out and still remaining very bullish. So this stock, I would say this: I wouldn't buy at $200 level right now, and I have bought it at $95, right? Really, about 6 months ago. So I'll wait for another pullback, and I would say $160 would be a good point to be into the market. And this stock maybe, who knows, you can project it to, if you're looking at the Facebook in the same time, which matter, the same time of timeline 2 years from from now I'm talking about, then you maybe the stock will be like $300 plus, right? So again, that video will also strategically, these type of stock I recommend a long term strategy, so you can now pull back buying it and keep it, and in the long run, wait a few years, it actually give you pretty good return, more than the market, the index, right? The index also give you very secure growth, like I had mentioned earlier, of this time earlier of the year, depending on which index you're having, you could have 15% to 20% return this year so far. Which again, if I project another 3 to 5%, growth on the fourth quarter, you're going to make a very nice historically comparison. In the last, I guess, before COVID, the return really really amazing on the index, right? And the next one I'll talk about Tesla. I think the market, the stock pretty much overpriced right now. You went back to when Trump won the election with the support of Elon Musk and $450 less range, and you have actually dropped back down all the way back down below 300 for those who remember that. So I would say this stock I would not buy at this level. I definitely will wait, but this is another stock that's good for long term because they have infrastructure and then know how to mass producing certain things. So if they want to take over one sector and develop the, like, let's say battery or whatever one day, definitely this stock will have a very very good advantage compared to other stock in the industry. So I don't see Tesla will only make electronic vehicle in the long run, but we actually will diversify into different things. One other thing I want to mention, though I didn't do a graph, is Netflix. Netflix, if for those of you who listen to my video again, actually earlier this year, I always said that Netflix stock is way too high. It should split. It'll be good for buying it in a split. So right now, they are announcing they're gonna split it, right? So $2,000 become $200 a share. So I think it would be a good one to look at. And in the long run, I really strategically, I think Netflix getting a cash that they will be able to diversify and grow into different business. You look at the history of Google, history of Amazon. I mean, they were really started with a very simple ideology and looking at this is the focus of a core business. And you look at 10 years later, right, you grow it into very different things that they're different and different market share and that they focus on. I really look forward Netflix to taking that type of strategy as one of the potentially big growth company. That way, in the long run, I mean, once it's split, it is a lot easier. $200 for $2,000 a share to invest. One other one, I think I have talked through all these stock already. So in a nutshell, I mean, also Alphabet Google was doing really well as well because of the, first ever spent 100 billion quarter driven by strong cloud and AI related services that they make a lot of money. So, but all these stock, I will quickly tell you, overcame Microsoft. I look at Apple is still very static company that keeping in cash you buy. Even if you dip back, it's always rebound. Matter is a really great chance if you pull back. You have to look for 2 years timeline for the return that will be actually hitting $900 as target price. Tesla, I think is overpriced, but yet at the end of the day, you're better on the long infrastructures and how they grow, how to be very systematic, set up the business for success in the future with various different things that they can put into the factory. So it's also good for Nvidia, since at this point still monopolistic chip making. I mean, although AMD and others are trying to catch up, but I think it will take a while to do that. So for now, this stock is still pretty good, but I'm waiting for a pullback opportunity buyback. The market will say this, right? There's still opportunity to grow 5% this year, maybe potential first quarter. Mostly the projection next year with the slow economy, even though inflation start to pull back, really this next year will be a very tough year. And I think the potential that these stocks that we talk about can pull back 30%. And and yet it's a buyback, it's a buy opportunity when you pull back, right? So that's why I'm very aggressive tells you if I give you 20% plus is a walking point, and really literally you wait for 20% or lower to be a buy point for long run, right? If for short term you can buy the 10% down in one bad day and buy it back, and then probably normally there's some rebound, right? And you also remember there's a really accurate come today. You're using the technology, the positioning, the calculation will lock into the computer system to really transacting the execution of the stock in a huge volume, not like individual investors. So it's very difficult game than compared to like 10 years ago when people talk about stock market. Just bear that in mind. So the two other stocks I want to talk about very quickly, or a few other stocks I want to talk about robots. So robots have been really good. I mean, I bought it $40, I say, a year or so ago, and then I sold it 80, $90. But at one point, you were going up to $140. You can see, and recently, you really have pulled back to $113 again. So it is the opportunity. I bought back a little bit, about $118. So if this stock rebound by $135 or sell in a short term, if you rebound, you look at the graph, if you bounce it back up, so then I'll make some good money on short term, okay? And then I will look at what's next. Helium have been doing very good and very solidly standing $2 about. I sold it about $1.85 and $1.90 most of my positions. So I kind of missed quite a bit, but again, I bought it pretty low, so I make pretty good money, and I'm pretty happy at it. So I'm waiting for this one to be, if I put a position out there, I'll wait for $2, and I'm not gonna buy anything lower than not lower than that, and I'll wait. If this stock again in the long run, with for those who hear my video probably 3 months ago or so, I mean, there was a sign in the intent of sales agreement that will really trigger this stock to be $40 a share in the future, if it materializes. So this is still a good stock to invest if you feel, not a lot of money, but you're looking for future next 10 years. This is still a stock that I highly recommend. And for short-term trading, I'll wait till if it tip back to $2 below, then I'll buy. And because at one point it was $1 something, right? So if I hold off to $1.15, I bought it. Now it's 100% return, same as Nvidia. But I obviously sold it because my rule is 25%, 25% to take a profit. But this one I actually wait quite a bit and make more than the other one because I'm looking for like this stock. I think is a long-term growth pretty well. And then the other one, Xpeng, I waited for probably $19 below to buy back. I sold it around $21. It's actually now $23.50. This stock again, at one point in COVID, it was gone up to $75. You really dropped right down to $7.50. So right now still got room to grow, and this stock is still not making money, but have a very strong sales in Europe, and the momentum continues, right? With the obviously with the price war, see who run in the EV space, but this stock I still a lot of space opportunity compared to NIO NEO. Obviously, NEO have gone up a lot to $750 from $2.50 as well, but this one I think is more static, improving it more in the future. So I'm just sort of look forward to this one to probably buy back at $19, and I will hold it for, again, this stock would be nice to have a long term. And Alibaba have been going very, very strong and coming back at $1.80. I mean, it really not surprised me. It got up $200, and I sold way too early. But Again, the problem about these Alibaba stock, this type of stock, Tencent, Alibaba, Bilibili, you know, and Baidu, is that if the government really invest and put money into and focusing on the stock market, pushing it up very high with a lot of sales, and DeepSeek will take another level and artificial intelligence. But then the challenge is these stock can also go down very quickly when you have tension between China and US and delisting potential, and then you can drop to really below, like this stock really, if you look at it 2 years ago, so it was really below, one point below $100, right? Like $80, right? And then now you're coming back, right? It's like a double. But the stock have a very high volatility. So Chinese stock recommended, unless you're a big stomach and you will look in future and determine the AI will be their way, then I will recommend you buy this stock. But this stock again, it doesn't surprise me. Continue to go up, but I would not buy back. Maybe $140. I think is a fair rate, fair price. So you have the same potential going up with the same potential going down. The other one, I really think people who buy this stock really love me is, Tesla Mineral Resource Corp. This one really, I bought it like I said, 90 cents to a dollar, and I sold $1.35. But you can see a couple of high points here. You gone up to $1.50. And then with the news, it's just the last 2 days, it's gone up to $3, and I tip, and then after that, you tip all the way back to $1.12. So it's very close to the point I'm gonna buy back again. So I actually bought some at around $1.10, but I also set up a position of buying back like 90 cents, which is definitely below a dollar. In order to make money, right? Otherwise, you can't make capitalizing again at 20% or so. But if you hit, but for those about $1.10. I said I was selling $1.30. So you sell 15% return if it happen very quickly next week or so, right? So this one again, I hope you make a lot of money. If you, for those who listen to my video, you were bought around $1.12, which is where it is at, which is probably you can still buy some at this point. And then you sold, hopefully you're not selling $1.35, but you sold at least $1.50 or $2 range. Then you really make a lot of money on this stock in a very short time. You look at the timeline. I mean, the last video I recommended last month, September timing, when you first heard from me, and then you really, it's just 1 month, you make 100% return, depending on what point did you sell the stock, okay? And then right now you have to wait, right? Because if you didn't sell, you miss it, definitely you're gonna wait. And then the other one, US Rare Earth, this one people even love me even more because I said I bought it at $14. You came down and lost a little money. I wait till $18. I exit my positions because I bought quite a bit on this one. And it's a little bit more expensive, relative speaking, as well. A dollar stock versus the $14 stock, right, at the time. 10 times more. So I couldn't buy a lot, right? And if you have the same number of cash, amount of cash. But this one, and so you can see obviously, there was some upticking, right? In October's month, you see the upticking from 14 that I bought, which is previous in September, and it gone back up to about 20, and you at one point gone up even $40. So for those who bought it at $15, like I recommend it, I hope you did sell around $30 to say 100% return in a month, right? Don't get too greedy, right? You really sell it really high at $40, congratulations. But why not the stock have all the way tipped back down to 1945, which is still higher than what I saw at 18-ish. But I'll watch this stock to come back down to again $14. I'll buy the same amount of share I have. So this is the way how you grow your wealth in short term, right? Yes, you buy same number of shares, right? Let's say $1,000, you buy the stock. You gone up, you sold. So let's say you make $200, right? 20% return. Well, now you tap back down again for the same level where you were, right? You'll buy back again. And if you've gone up again, right, hopefully 20% again, then you sold again. Then you get another 20%. Same. If you can do that in, like, let's say a quarter, you get 3 opportunities once a month. Then that's 60% return for the $1,000 you have. You make $600. However, you gotta remember short-term capital gains, so it will be additional tax for you, but still a very nice return. So this is in the analysis what I get into is in the past was, what would you be better off to do short-term taking all this profit versus put a stop and look at long term. And La Video would be a good example that for the time in April to now, the stock level $100 to $200, so you make 100% return, right? But if within the 6 months, if every single month you lock in the position, you make 25%, you actually will make more than 100% return. Okay, so this is what I'm going to taught you is you got to look at the position, you got to decide what strategy you're going to take, short term versus long term, right? And then you will take some capital gain. The key point is to be disciplined and don't get greedy. Then you will be able to make the money that I told you, starting with $1,000 investing throughout the time. Now, however, fourth, like I said, November historically will be a very strong month, but then there are also some, uncertainty and also challenges with tariffs and whatnot. So hopefully you will be continue to push it, and then if next time the S&P 500 get down to what I said to 7,200, I think all these stock will be really in a really strong place again. Will be another 10% return. So hopefully between now until then you'll be which is the one Thanksgiving I'll do another video. So hopefully by then you'll make 10% return. I hope everybody have a great and wonderful week and happy and stay healthy. I know the weather changes, so be cautious. Wear a jacket or whatnot when you go out the door. Thank you very much.